Guys, welcome back to our channel Accounts Guru Cool. Learn accounting online. So today we are here with one more video, and in this video we are going to discuss about balance sheet reconciliations, interview questions with answers. Related to R2R, we know that how much is a balance sheet reconciliations is essential, and if you see for each and every profile, the interviewer asks in job descriptions, you should be well versed with the balance sheet reconciliations. So related to that, we have covered a few interview questions. So what interviewer might be ask you or going to ask you related to the balance sheet reconciliations and how you have to give the answer for that. That's we are going to discuss in this video. So request viewers to watch the video till the end and like the video, share the video, and subscribe our channel to get the more practical knowledge related to accounting and finance. What is balance sheet reconciliation procedures? The balance sheet reconciliation verifies the accuracy of the balance sheet by comparing the numbers on the general ledgers to other forms of documentations to explain any discrepancies. So we just need to give the clarification about that. What is the balance sheet reconciliation procedures? And before that, what does it mean by balance sheet reconciliations? So the balance sheet reconciliation is going to do the verifications between the two set of different books to find out if any difference are there, if any discrepancies are there. Essentially, reconciliation is done to verify that accounting for a certain period has been accurately portrayed on a company's books. So that's the meaning of balance sheet reconciliation. Why GL reconciliation is important? Now, the next is why the GL reconciliation is important. The general ledger reconciliations or GL reconciliations is necessary to know that your financial statements are accurately reflecting your financial status and health. So whatever we are presenting the financial statement, that's a balance sheet or cash flow. So what are the numbers reflecting over there? That's giving the true and fair pictures that we need to find out through the reconciliations. In some cases, an expert bookkeeper can perform this critical routine, and in others, a trained CFO or controller must step in. So in routine cases, expert bookkeepers can perform this critical routine, and in others, a trained CFO or controller must step in. Why? How do you reconcile a balance sheet to a general ledger? How you're going to do the reconciliations of the balance sheet with the GL? To complete a general ledger reconciliations, accountants typically follow these steps. First, obtain necessary details of the general ledger account, reconcile ending account balance to supporting documentations, investigate any discrepancies are there, prepare adjusting journal entries if necessary, and ensure the accuracy and to the prevention such kind of open items are not going to be into the futures. How do you reconcile a balance sheet to a general ledger? So follow the steps what we have mentioned here that we have to be give the answer for this question. Now, how many types of reconciliations are there? So there are 5 main types of account reconciliations: bank reconciliations, customer reconciliations. First is bank reconciliation, customer reconciliations, vendor reconciliations, intercompany reconciliations, and business specific reconciliations. Let's explore each one of them in detail. So how many types of reconciliations are there into the balance sheets are there? There are a few more critical type of reconciliations are there. One is bank reconciliation, second is customer reconciliation, third is vendor reconciliation, fourth is intercompany reconciliation, and fifth, business specific reconciliations. What are the challenges of reconciliations? Here are 4 issues that need to be addressed. The first, slow data input process. In many companies, reconciliation is still a slow, tedious process. Error-prone inputs. Another consequences of these manual input is they become prone to errors. Potential for fraud. Effective archiving and auditing. That's the reasons of the challenges what we face while doing the reconciliations. One is the slow data input process. So we have to do the reconciliation. For that, we need a different data, different set of data for reconciliations. And if the data input process is slow, then it's going to be impact on the reconciliations. Now, Are accountants with zero balance required to do reconciliations? Yes, if the account has activity within the quarter, even with a zero balance, a reconciliation still needs to be completed because there might be some transaction during the period, and related to that transactions, we need to validate and we have to ensure that transactions are correct. So reconciliation is required. Why is reconciliation is so difficult? Very essential. Not only are they inefficient, but they can be extremely dangerous, especially for accounts payable teams. Inaccurate reconciliation can lead to missed payment, late fees, and even bankruptcies. Another reason why reconciliation is include or why reconciliation is difficult is because of the sheer number of transactions that take place each day. So what are the volumes are there? That's based on this volume, the reconciliation is going to be more difficult, and it's specifically or essential for accounts payable team to have reconciliation to ensure the inaccuracy if any payments are there, missed payments, late fees, or even that's going to be cause of bankruptcy as well. So what is the biggest challenge in the daily reconciliation of transactions? The data. One of the most important challenge of the bank reconciliation is having the necessary data. If you don't, then it will undermine the whole process. Different references on the bank and general ledger, that's the GL sides, make high volume transactions problematic. What is the open item in reconciliations? The item which is not in a position to get knocked off is regarded as open atom, which is a high risk reconciliations. Reconciliations is performed daily, monthly, or quarterly based on whether an account is defined as high, medium, or low risk. Typically, high risk accounts include cash, trade receivables, payables, and financing receivables. So these are all the high risk reconciliations related to the bank reconciliations, cash reconciliations, account receivable, trade receivables, payables, and financing receivables. What would happen if the reconciliations did not balance? Previous reconciliation is out of balance. This would cause the transaction to become unreconciled, and edited transactions will reappear on your current reconciliations as unreconciled. Any deleted transactions will have to be re-entered. That we have to do when if reconciliation did not balance. And how do you reconcile GL SL? The reconciliation process involves the following steps. 1. Compare the entries in the general ledger to those in the subledger. Identify the differences between the subledger and GL. Decide if a correction is necessary and in which of the two the corrections should be recorded. We will look at the type and reasons for differences and the appropriate response to them in the next section. Prepare the reconciliation statement and process adjusting entries. We will show an example of a reconciliation statement below. So we are going to see for that in the next videos. Compare the balance of the general ledger and the subledger total. If there is still a difference, you will have to start again. So that's related to this. We'll go for balance sheet reconciliations, balance sheet reconciliation interview questions with answers. So thanks guys for watching the video till the end, and request viewers to like the video, share the video, and subscribe our channel to get the more practical knowledge related to accounting and finance. Thank you.